Good afternoon, everyone. Is my voice clear?
Yes,
Okay, thank you. So today we are gonna go over the Excel part of your project. So I believe you can also do the Excel part of your own project today in the class. So this is how you can actually complete the significant part of your project and then do the write-up part at your home and submit it by the due date. So let me now show you the Excel part, and then whenever I'm gonna go over the Excel part of Apple Incorporation, you can actually do the work for your own company. And then if you face any problem, you can immediately raise the issue. I'm gonna help you to solve the problem. Okay. And also for your information, the class is recorded as usual. So after we finish the class, the video will be uploaded to your Blackboard account. So even after we finish the class, if you want to go back and then check today's lecture, you can always find the video in your Blackboard account and then get the necessary help. Still, if you need additional help to finish your project, you can always see me during my office hour. Obviously, the meeting will be virtual according to the university rule, and then I'm gonna help you. So let us start the Excel part. Okay. So there are a couple of steps that we are gonna follow. Let me hide everything. So here. So we're gonna follow a couple of steps to complete this Excel valuation. We can break down all these steps into four different groups. In the very first group, we are gonna collect all required information. So the required information include market return data, and obviously we are gonna get this information from Yahoo Finance. And as usual, the benchmark index we are gonna use to calculate market return is S&P 500, and the ticker of S&P 500 is GSPC. Then we are going to collect financial statement information for the last 5 years from Morningstar. You can also collect the same information from SEC Edgar. So it is up to you what source you are going to use. Next, we are gonna use 10-year Treasury bill rate as our benchmark risk-free rate. So remember from your equity valuation chapter that uh, whenever you want to use CAPM, the capital asset pricing model, to calculate the required return, then you need to use risk-free rate, and then the benchmark for the risk-free rate is 10-year treasury bill rate. You should know all of these information from your Finance 343 class. But don't worry, even if you forget, we are going to cover the same information, the same concept in our subsequent lectures. Then you also need to collect market capitalization information, then number of shares outstanding, benchmark market multiples, and value line report. Um, Then once you collect all the necessary information, you can move to the next stage. In stage number 2, you need to put all the financial information you collect in stage number 1 in your financial template. Then in stage number 3, you need to forecast the financial statement based on all the information you collect in this part. Then in the very last stage, you need to actually perform your equity valuation based on all the steps you have done previously. Okay, so this is the brief overview of our today's work. Now let us move to the Excel part. So yes, all the materials for your project are available in your Blackboard. I posted them, I believe, 2 to 3 weeks ago, and then I made another announcement that your project work and then the evaluation are available. So you can check all the materials for your project in your Blackboard account. So let me just show you where they are. So if you go to this all test section, you will find your equity report and presentation. So here you can see I have already uploaded your valuation, I mean the sample valuation. You can use this template for your own valuation. If you want to do any modification, you can always do that. Then I also uploaded a sample report. Then I also uploaded the term paper template that you can use. Once again, you can do all the necessary modifications and adjustment in this template and then report as you deem necessary. So it is up to you. Um, then you need to upload both your Excel file and then your equity file, that means your Word document here. Also, you need to upload a 10-minute presentation for your term paper. So you should present your term paper in a group. So basically, you need to distribute this section of different sections of your term paper to different members in your group, and then um, make a good effort, I mean group effort, to actually present your work. Okay, so now you know where you can find all the files for your term paper, and you also know where you need to upload and what documents you need to upload. All right, thank you, Miss Olivia, for your question. So let us start the Excel part now. So this is the template we are going to use, but here I'm going to show you some of the important works, then you can figure out the rest of the work. So let me show you the actual file. So this is the actual file we are going to use. So here you can see this is the template you are going to use. So here you need to fill up all the information. So you should start with your company name and then ticker. Say in my case, my company name is Apple Incorporation. So let me find out the ticker of Apple Incorporation. In this world you can Google everything. So Apple Incorporation ticker, you see, AAPL. So I know my ticker now. So you can also search your own company ticker, and then copy the ticker to your template. So here I'm going to write APL, then analyst. So here you can put your group name since you are working in a group. Say your group name is group 1. So put group 1. Then recommendation. So once you complete this valuation part, you should find the average price of this company, the fundamental price you recommend. Now, then you should compare this price with the current market price. If you see your estimated price is greater than your current market price, and you can see a significant margin or significant return, Say for example, if you calculate say 5% return for Apple Incorporation, then it is not a significant return. But if you see that the upside of Apple Incorporation is around 10%, that means you can get 10% return from your investment, then yes, it is a significant return. In that case, you can put buy recommendation. But if it is 5% return or 2% return or negative 5% return, you should say you are neutral. Now, if you see the current market price is significantly lower than the price you estimate here, then you should go for sell recommendation. So that means you should ask your investor to sell out their positions. Okay. So now you know, once you calculate your recommended stock price and compare it with the current market price, then you can actually determine what should be your recommendation. Your recommendation could be buy, sell, or hold, or neutral, whatever you want to say. Okay, so here, I mean, you can put at least one recommendation. You cannot have more than one recommendation at the same time. So buy, sell, or neutral. So actually, you can use three words, one of three words here. So I put some restriction here: buy, sell, or hold. So you should select one of these three words as your recommendation. Then set a stop, you should always say yes, because by putting stop, you can actually minimize your loss. So, and then recommendation date. Say for example, if you prepare your note today, your project today, so today is your recommendation date. Next, number of shares. So here you can use your own discretion. If you want your investors to sell 500 shares, you can put 500 shares. If you want to buy or sell, whatever is your recommendation. If you want them to sell 5,000 shares or buy 5,000 shares, you can put it here. And then price. So this price should come from here. So this is the price you determined. Then total amount, you know, if you multiply number of shares you recommend by the recommended price, you should get total transaction value. Next, you should write down sector name, industry name, then current price, 52 weeks low, high, shares outstanding, market cap, average daily volume, institutional holdings for your specific company. You should also put brief company descriptions. You can get these brief company descriptions from Yahoo Finance or 10K report posted in SSC Edgar. And then you will find your potential risk information from your 10K, most recent 10K. And then reasons for transaction, you should get reasons from your valuation and from the equity report. That means from the annual report 10K. Say if you want to put buy recommendation, then you should find some positive news or positive reasons for your recommendation. So here, say for example, if you want your investors to buy the stock of the Apple Incorporation, the possible reason for transactions may include, say, significant future sales growth, significant investment in R&D, new product line with high demand in the market. So you can always find some positive reasons for your investment. Now, if you want your investors to liquidate or sell their position in the stock of the Apple Incorporation, then you should always come up some negative reasons for your transaction. So those negative reasons may include significant decline of the iPhone sale in the Chinese market. In 2020, uh, Apple actually experienced 29% decline in its iPhone sale in the Chinese market. And Apple generates a significant portion of its revenue from the sale of the iPhone. So that could be one of the negative reason. Or you may also say, because of the current the government policy, uh, the cost of production of the Apple Incorporation is expected to increase in the future years. So that is another negative information. So you should always come up with something negative if you recommend sell. However, if you recommend buy, then you should always come up some positive information or positive news. Then here you should put some 12-month price chart. um, some of you may want to put 60-month price chart or 24-month price chart, so it is up to you, but here you should have at least one price chart. Now you can generate your own price chart using the um, figure option in Excel, or you can copy the chart from Yahoo Finance. So let me now show you how can you get all of this information and then price chart from the Yahoo Finance. Okay, so Google Yahoo Finance AAPL ticker. So this is how you can get the Apple Incorporation page in Yahoo Finance. Now, if we scroll down, then you'll see, the most recent price, 52 weeks highest price and the lowest price, the average sales volume here, the market cap, the beta, and then you can also collect some important information from the statistics section of this page. So in statistics tab, you can see here percentage holdings by institutional investors. So you can actually collect all the basic information here from Yahoo Finance. Then let me show you where you can find company descriptions. So go to the summary page. It is not here. Company outlook, no, you cannot use it. Let me see historical data. Profile. Here, you see, in the profile tab, you can find the basic descriptions or basic company information. You can rewrite this description part in your own word and then copy it to your template. Next. So now, one more information I want to show you how to get this price chart. So for a price chart, you can go to the summary page, and here you can see the price chart. So you can copy it. So if you want 1 year price chart, use this 1 year button. So 1 year, and then copy the image and then paste it here in your template. If you want price year, a 5 year price chart, then select this price year, 5 year price chart, and then copy it to your template. Now, let me also show you how to get some important information about your company from 10K report. So you get 10K report from SEC Edgar, right? So let us Google SEC Edgar company search. So in this page, type AAPL. Here you want to get the most recent 10K report, right? So type 10K, then hit the search button. Now you see, you find the 10K report from the year 2020 to the year 1994. And for your information, I posted this Excel template at least 2 weeks ago. And then by the time I posted this one, 2020 financial report was not published. So my forecasting year is actually 2020, and I used 2019 financial statement from here. So then check this document part of 10K, and then here you can see 10K report. Now if you scroll down here, you can see the basic company information. So actually you can write down the company description from the 10K report of your own company. So you can see at the very beginning of the 10K report, the company provides basic background, the products and services they offer to the market. Then remember, as part of your report, you need to actually do some SWOT analysis, which is strength, weakness, opportunities, and threat of your own company. So to actually um, um, perform the SWOT analysis, you can collect information from this section. So right after the basic company information, the company actually also describe their competitive status, market and distribution, then their basic R&D and other information. So you can use all the information here in this section to perform your SWOT analysis. However, another important trick is SWOT analysis for most major companies are available online. So you can Google SWOT analysis for your own company and write them in your own words. So now you know how to actually fill up the very first page of your term paper. The next step is to calculate market return. Whenever you actually calculate market return, you need to actually determine what is the most recent date up to which you are gonna collect your market return data. Here you can see I actually collected the market return data up to October. Actually, it should be um, yeah, October. So here you will see I'll collect market return data up to October 2019. And let me show you why I'm going to collect 5-year market return data up to October 2019. Let us go back here. In the 10K report, you will see Apple Incorporation posted their 2019 10K in September 2019. And I'm actually using the financial information reported in the year 2014 to 2019, because these are the 5-year financial statement information provided. So whenever you calculate any present value based on your forecasted financial statement, you will always get present value in the year 2019, because that's the most recent information you used. So your market return data should always end in at the most recent financial statement date. So your most recent financial statement date here is September 2019. So your market return data should stop here in this date, September 2019. Now you know to calculate your market return, you are gonna use the recent 5-year market return data. So your market return data will be from the year 2014 to the year 2019. So this is how you get 5-year market return data. And then here your market return actually stops in the month September. So you should start from September 2014 to the September and then end in September 2019. So this is how you get 5-year monthly market price data. So let us now calculate market price data. So to calculate market return, we are gonna use this link of Yahoo Finance. So here you can see this is the S&P 500 index page in Yahoo Finance. Now we are gonna collect the historical price data of this company. And remember, for my company, I'm gonna stop on September 2019 because that's the most recent financial statement date. So let me stop on September 2019. So here you can see 2019 and I'm going to stop in September. But let me just share one information. So if we stop in September 2019, for some reason, Yahoo will not provide you monthly price data for September 2019. So just uh, go 1 month forward, stop in October 2019. So this is how you're gonna get September 2019 monthly price data. Then I'm gonna start in the from the year 2014 to get 5-year financial statement, 5-year market price data. And once again, I'm going to start from October actually. So this is how I'm going to get 60 month. That means 5-year price data. So now you see, then hit done. So you see the time period has changed. Now you want monthly data, not daily data. Then hit apply. Now you'll see this data posted here has changed. You see, you get data up to September 2019. Let us also check the beginning date. The beginning date is what? September 2014. Now you want to copy this data. So what you can do, you can actually download this data in a CSV file. So hit download. Here you can see the data are already downloaded. Then open the file. Next, next step is you need to sort the data from newest to oldest. Otherwise, it will be complex to calculate monthly return. So let us sort the data from newest to oldest. Sort newest to oldest. Expand the selection. Yes, you want to expand this selection up to the very last column. Sort. Now we are going to calculate the return. Some people use closing price, some people use adjusted closing price. So it is up to you. So let us calculate the return here. So return for the return can be calculated as the um, current price. I mean the, let me check. So I want to calculate return for this. So I want to use this. This is the most current price divided by the previous price minus 1. Yeah, so this is how it is. So if you remember from our class, the way you can calculate return is the current price divided by the previous price minus 1. So here, this is your current price, this is your previous price. So hit enter, and then also select this percentage button here. So return in the month of September of 2019 was 2.4% for S&P 500 index. Now you don't need to manually calculate for all the months. What you can do, select this cell here and then move your cursor to the very corner. Then you'll see your cursor will become a positive sign, plus sign. So once it becomes a plus sign, then double hit your mouse. So once you double hit your mouse, your return for every month will be calculated. The return for the very last month cannot be calculated. Why? Because for the very last month, we don't know the previous month price data. Now let us count how many month return we have here. If you select return for all the months, you will see for how many months. So here you can see count at the very bottom. You now have return data for the last 60 months up to your last financial statement date. So your last financial statement date is September 2019, and you have 60-month market return data before your financial statement date. Okay, so now copy all of this information from here, copy, Control C, or you can even do it manually. Copy, then move to your valuation page here, and then hit the button paste. Now here you got the market return, and you need this market return to do your valuation. So let us make sure everything is calculated properly here. So you see here 5-year average market return. So you get it from average of all of these returns for 60 months. And remember, with the average formula, you get average monthly return. But for your valuation, you always need annual return. So to convert monthly average to annual, we need to multiply the monthly average return by 12. So this is how you get 5-year average market return. Anyway, so now you have completed the second phase of your uh, Excel valuation template, and you know all of these returns are linked to where, are linked to your valuation page. So here you actually use the data in your market return page to calculate 5-year average market return. And of course the return should be converted into annual. Okay, do you have any questions so far? Now let us start the income statement page here. So in this page you just collect information for your income statement and statement of cash flows. So let me show you how you collect the information. So we are going to collect the information from Morningstar. Let us Google Morningstar AAPL, you ticker. So you can see here the Apple Incorporation page in the Morningstar web page. And here you want to collect your financials information. More specifically, you want to collect income statement, balance sheet, and statement of cash flows information. So here you can see your income statement. So select income statement from here, click here. Now you see your income statement data from the year 2015 to the year 2019. So Morningstar can will allow you to collect the financial information for the last 5 years without any subscription fee. And for your term paper, you need to collect 5-year financial statement information. You don't need to subscribe to Morningstar, don't need to pay any money. Now you can export all of the income statement information to the Excel. So hit this export to Excel button at the very top right corner. Here you can see. You can see the income statement data are downloaded. So copy all the income statement data from here to your valuation page. Next, you are gonna collect the balance sheet cash flow data. So from cash flow, we need two specific information, including the depreciation, amortization, and depletion data, cash dividend data. So here, let's go back to the Morningstar web page and then export all the cash flow data to Excel. Now, you know, depreciation is the part of the operating cash flow. So let us check the operating cash flow section to get the depreciation data. So here you can see the depreciation data is posted here. So copy this data to your valuation page, to your valuation template, and then you should get cash dividend data from the financing cash flow section of the statement of cash flows. So copy the cash dividend data from here to your template page. So these are the two information you need from the statement of cash flows. Then let us collect the balance sheet information from the same Morningstar website. So now select the balance sheet section of the financials. Again, you will get 5-year balance sheet data without any subscription fee. So export to Excel. And then copy it to your valuation template. Okay, so now I want to pause here a little bit. I want all of you to collect the financial information for your specific company from Morningstar, and then I'm gonna show you how to actually um, report all of these financial statement information to your template. So this part is the most important part. If you can actually um, post all of your financial statement information in your template here correctly, everything else will become very easy. So I want you to collect your financial statement information from Morningstar in the next 5 minutes, and then we are gonna together post all the financial statement information to this template, and then we are gonna proceed from there. So you're gonna get 5 minutes, and then I'll be back at 3:17.
I have a question real quick. You hear me? Hello?
I can hear you, but I think he's gone.
Oh, okay. Thank you.
Okay, so Chan, is it the right pronunciation? Chan,
Yes.
Trey Chan. So Trey Chan has a question like the income statement um, does have information, does not have information for the year 2015. The data starts from 2016. It is not a problem. So you collect data for the last 5 years. So you can collect data from 2016 to 2020. Still you have 5 year window here. So for some people, uh, you need to collect data from the year 2014 to 2019, because the financial statement for your company may not have been posted. But for most of the people here, the 2020 financial statement should already be posted. Then you should collect data from the year 2016 to the year 2020. Um, so yeah, Miss Olivia. So pull depreciation, amortization, and depletion from the statement of cash flows.
Okay, thank you.
Good.
And that goes on the valuation tab, right?
Uh, Let me increase my volume. Yeah, could you please repeat your question?
And does that we put that on the valuation tab?
No. So let me just show you again. Um, oh, not this one. So we are gonna actually post it to the statement to the income statement tab here. So you're going to copy it here, and the cash dividend should be copied here.
Okay, thank you.
You're welcome. So the good part of your hard work today is you're going to finish the most important and the most interesting part of your term paper today in the class. So it is going to reduce a significant amount of time for you people um, to work on your toward your term paper. So basically, after you finish this Excel part, even if you invest 6-7 hours at your home to complete your term paper, I believe the time is sufficient. Okay, so now let us start the next part of your Excel template. So here, what you can do here is, let me just show you. So you can repeat with me the same process. Delete this revenue part, cost of goods sold part, then operating expense part, depreciation expense part.
Your screen isn't sharing anymore.
Oh, okay. Let me share it. So let me go back. And you know what you can do? Just delete everything you have up to your total liabilities and shareholders equity. So in these blank cells, you need to put your information in a correct order. Then everything else should automatically be calculated for you. So let us put all the information in right order. So first, we are going to fill up our income statement information. Now, if you go back here, you will see they provide the main line item, then they also provide the sub line item. So if we use the main line item, you should not use the sub line item. Otherwise, you are going to count the same amount twice. So you should not do any double counting error here, right? So here, let us first highlight. So here, you want to collect total revenues. Here you can see it starts with gross profit. We are going to calculate gross profit. So you don't need to actually copy this line to your template. So you are not going to use it, right? Then next line is the total revenue. Remember, you may have different lines in your income statement or balance sheet. If you have different lines, raise the issue. I'm going to help you. So you are going to start with total revenues. Then you can see total revenues. Here is the main line item. You can see it started with some space here. So basically this space indicates that this total revenue is the part of gross profit. So okay, we have not copied gross profit, so we can obviously copy the sub line item of this gross profit. Does it make sense? So we can copy this total revenue. Now, this total revenue is the main line item of the business revenue. You can see, because the business revenue started with with a space. So you can see here total revenue. Then this one has um, one more space, and then um, in this line item they actually write down this business revenue. So from this spacing we can actually identify the main line item, sub line item. Now from here I'm gonna use the main line item, which is total revenue. So since I am using the main line item, I cannot use the sub line item, so just drop it. Or if you want to reduce all the complexity, you can even delete it. It is up to you. I highlighted, you can delete, it is up to you. But I prefer highlighting so that even if I make any mistake, I can go back and correct the problem. Next, I'm gonna use cost of revenues, which is actually cost of goods sold. So since I used cost of revenues, I cannot use cost of goods and services because this one is the subline item of the cost of revenues. Then operating income or expenses. Excuse me. So let us go back to the financial statement template. Here you can see we need to use revenues. We need to use cost of revenues. The next item is operating expense. Okay, let us go back to the income statement. Here you can see you operating expense. So we are gonna use this main line item. So since we are using this main line item, we cannot use the other sub items under this main category. Okay, now let us go back one more time to this operating expense part and show you one more line item here, depreciation expense. Depreciation expense is the part of the operating expenses. However, companies usually do not report depreciation expense as a separate line item. Instead, they actually include this depreciation expense within this operating expense line item. So since here we are separating depreciation expense from the operating expense, we need to reduce this item by the depreciation expense. So this is how we are going to separate them out. Separate out other operating expense from the depreciation expense part. Okay. So once you consider all of those, you should get operating profit or loss. We are going to calculate it, so we don't need to use this item. We are going to calculate it manually. Next, we are going to move to the non-operating income or expenses. So let me go back. So here under non-operating income or expenses, we are going to separately report interest expense, interest income, and other income. So let them separate out. So here you can see, let us go back one by one. So here you don't see interest income or expenses separately. So let us go one step down. So here you don't see interest income or expenses reported separately. But in the next sub item, you can see both items are reported separately. So pull them up from these subcategories and report it to your forecasted income statement and balance sheet page. So now you can see these two, you are reporting these two line items, and they are part of these main line items, so you don't need to report them. You don't need to report them because you are reporting their subcategories. However, these other income or expenses are not part of these main categories, so you need to report this one. And you can identify it from the spacing, right? The space they put in front of each line item. So you can see these two line items are not part of this one. So this one actually is not part of this, thereby this Other income is not part of the net interest income or total net finance income. But this one is part of the non-operating income or expenses. So we want to report all the non-operating income or expenses. So we are gonna actually copy this line item to our forecasted income statement and balance sheet. So this is how we are gonna get our pre-tax income. We are gonna manually calculate it. You don't need to copy it from here. Then we also need to report our income tax expenses, and we get it from here. So then we will get our net income. So before I start reporting all of these line items here, I want you to highlight your items from this income statement you want to report in your forecasted income statement and balance sheet. So I'll give you 2 to 5, I'll give you 5 minutes to highlight your items. Then if you have any confusion about any line item, you can bring it up. I'm gonna help you. So take 5 minutes. For your information, we have a main group session coming up this Thursday. Dr. Collins will make a announcement. I hope in the next 1 or 2 days. I'm going to also make another announcement in your Blackboard account. So if you people participate in that session, I'll give you 5 bonus points with your midterm exam too. So you need to participate to that session and then send me an email. Then I'm gonna add 5 bonus points with your midterm exam too. So once again, this main group is an institutional investor. Um, and the most interesting part is um, they want to train you for their investment, and from this equity analysis you will know the fundamental work you need to do in that company and the basic information you need to know from your bachelor program to actually work in that company. So they are coming here to see what type of students we have. They want to get some information, and at the same time you people can also give them some additional information. So that session is very important for your future internship, and at the same time this main group session is very important for our finance program. So therefore it is a mutual benefit for that company and for our program. I strongly recommend all of you to participate in the main group session. Obviously I'm going to post a separate announcement, so check your Blackboard account. uh, Provided you attend the session, I'll add 5 bonus points with your midterm exam too. And the session will be 2 hour long. Okay, so now do you have any questions about your income statement? Do you have any extra items beside the items here you can see in my income statement? Okay, if not, then let us go back to the forecasted income statement and balance sheet and then fill up all the information you see over there. Yes, Miss Olivia.
So for my other income expenses line, like for some of the years it's blank. Is that okay?
Okay. Um, Let me give you the option to share your screen and
Oh,
then
I'm on
yeah,
my
when
phone, so I can just turn it around. Like when I pull my income statement, this line for my other income expenses is blank for years
oh
2015.
it is gonna create some problems. So you just put zero in all of
Okay.
those black cells. Yeah,
Okay. Thank you.
you're welcome. All right. So I hope you don't have any question. Then let us go back to our template. So here now let us put everything one by one. So for your information, we are gonna put everything in USD million. Now let us select one by one. So we first want to copy the revenues, right? So first type the equal sign. So that's the very first step. So you should always start with the equal sign. So start with the equal sign and then go to the sheet, Excel sheet you want to use to collect the information. So obviously for the income statement information, we are going to always use the income statement tab here. So go to the income statement tab and then from here we want to use the total revenues, right? So I want to copy 2015 total revenues and want to convert it into USD million. So divide it by 1 million. So 1 million is 1, then 6 zeros. So you see, this is how I collect revenue data for the year 2015 from the income statement tab. Now, take your cursor to the very end of this cell. Then once you take it to the very corner, your cursor will become a positive sign. You see, positive. So once it becomes positive, then hit your left button of your mouse and drag this selection up to 2019. If you have 2020, then drag it up to 2020. Oh, okay. So Trace Chan has the income statement started from 2016. So for your case, your beginning year should start from 2016 only for your case. And then you see, so once you send the very first column to 2016, everything automatically changes. So 2016 to 2020, you are going to put information in this blank spaces. Then you are going to forecast from the year 2021 to 2025. So you can change all of these columns headings. 2024, 2023, so you can change all of them as you need. Okay, so now you know what you need to do for your case. Okay, so let me copy the revenues from the income statement one more time. So income statement total revenues divided by 1 million to convert the items into USD million, and then drag this item up to 2020 2019. So now you can see you actually get revenue data for all the 5 years. Next, cost of revenues. So for cost of revenues, once again go back to the income statement page here. So here you can see cost of revenues, right? So select this 2015 cost of revenues, convert it to million. Now we got our total revenues and cost of goods sold. So we are perfectly placed to calculate our gross profit. So gross profit is the difference between your total revenues and cost of goods sold. Now let us match this gross profit with the gross profit reported here. So this is how we can make sure that our calculation is correct. So here you can see um, the gross profit for the year 2015 in USD million term is 93,626. So let us go back to the income statement and check this tab here. Gross profit. So gross profit for the year 2015 is how much? 93,626. So you see the amount reported here matches exactly with the amount we calculated here in this forecasted income statement and balance sheet template. So that means the way you selected all of these items are correct. Now, let us calculate operating expense. So for operating expense, let us go back to the income statement. So here your operating expense is here. And once again, as I discussed earlier, you want to separate depreciation out of this line item, operating expense line item. So reduce this operating expenses by the depreciation expenses. So reduce it by the depreciation expense. Here you can see your depreciation expense is positive and your operating income is negative. So to reduce this item, hit positive sign and then select this item. So this is how your operating expense will go down. You see your operating expense here is how much? It starts with 11. Let us check this one. This one is 22. That means you reduce this item. So that means you are going to the right direction. You want to reduce your operating expenses by the depreciation amount. Now, you want to convert all the items into what? USD million. So, put all the selections into bracket and then divide the sum by 1 million. So here you got your operating expenses. Next, let us copy the depreciation expenses from the income statement tab. So once again, start with the equal sign and then check the income statement tab, go all the way down. Here you have your depreciation expense. Select depreciation expense. Convert it into USD million. Then hit enter. Then drag it all the way down to 2019 or to the very last year. Now, this is your depreciation expense. Here, you can see here, we are expressing all the items, all the expenses as negative, all the income as positive. So, to just follow the same pattern, we need to convert this depreciation expense into negative. So, put one negative sign before the item. Now you can see it becomes negative. Now drag it to all the way down to your very last year. So now you can see you are actually following the same format. All the expenses here are reported as negative. All the incomes are reported as positive. Okay, so now we are perfectly placed to calculate our operating income. So operating income is the difference between gross profit and all the operating expenses. So here you have two different operating expense line items. One is what? Operating expense, and the other one is what? Depreciation expense. Then hit enter. Okay. So now your operating income for the year 2015 in USD million term is what? 71,230. So let us now compare this number with the number reported in the income statement we downloaded earlier, right? So let us go back. Here you can see your total operating profit is how much for the year 2015? 71,230. So this is exactly what we have calculated here. So that means we actually copied everything correctly. Now, let us now copy all the non-operating income and expenses. Now here you can see we are going to divide our non-operating income and expenses into three line items, including interest expense, interest income, other income, and expenses. Okay, so let us now copy all of these line items one by one. So let us go back to the income statement page, and here you can see your interest expense. Once again, convert all line items into USD million. Again, drag it all the way down to your most recent year. In my case, it is 2019. For your case, it could be 2019 or 2020. But it cannot be 2018, right? It cannot be 2018. You last year can either be 2019 or 2020. Okay, then let us copy interest income from your income statement tab. So once again, go back to the income statement. Here you can see your interest income and convert the item into USD million. So again, you can see you are expressing all the income as positive and all the expenses as negative. Then let us copy other income. So here is your other income, and convert other income into USD million. Okay. So now we are ready to calculate our taxable income or earnings before tax, whatever you call. So Earnings before tax or taxable income is the difference between your operating income and what? Non-operating income or expenses. So operating income and non-operating income and expenses should provide you taxable income. Drag it all the way down. So now let us make sure that our calculated taxable income is the right one. So the calculated taxable income for the year 2015 is 72,515. So let us check in the income statement we copied from Morningstar. So here you can see your pre-tax income or taxable income for the year 2015 is how much? 72,515. So that means your calculated number is correct. Now let us copy the provision for taxes. So provision for taxes should come from the income statement. Once again, convert the line item into USD million. Then calculate your net income. So net income is the difference between your taxable income and total taxes. So once again, you can see we are expressing expenses as negative. Okay. The next item is your dividend. So let us copy dividend from your income statement. Here is your dividend, then convert it into USD million. Now we are going to calculate dividend payout ratio. So your dividend payout ratio is calculated as dividend divided by net income. So here you need to convert your dividend into positive number, because your dividend payout ratio can never be negative. It is something positive. So to make it positive, what you need to do, you need to convert this dividend number into positive in this formula. So to convert a negative number into positive, what you need to do, we need to put another negative sign. And for your information, negative sign multiplied by already existing negative sign will make the sign positive. Negative times negative equals to what? Positive. So your dividend payout ratio for the year 2015 is 21.7%, and drag this calculation all the way down to 2019. Okay. Now transfer to retained earnings. So um, from net income, you distribute some portion to the shareholders as dividend, and you actually add the remaining portion to the retained earnings. So from net income, you are gonna distribute this dividend to the shareholders and retain the remaining amount to what? To the retained earnings. So transfer to the retained earnings should be the difference between net income and your dividend. All right. Now, let us take 3 minutes break. So we'll be back at 3:53. Then we are going to start the balance sheet part. Okay. Have you faced any problem for your income statement so far? Okay.
My
Yeah.
like my earnings before tax isn't coming out like the same as from my income statement.
Okay, Miss Olivia. So in that case, can you share your screen?
I'll show some. I'm gonna join from my computer so it's easier.
Okay. All right. So you said your taxable income is not the same, right?
Yeah.
So here your taxable income is how much? Say for the year 2015,
No, it's coming out as pre-tax income is
here 7442. Yeah, I can see 7442. And then your forecasted, I mean, in your case, it is 6,385. So yeah, I can see you may have missed something. So is your operating income the same as reported in the income statement?
I believe so.
Say your operating income for the year 2015 is how much?
2496.
No, not this one. It is operating income or expenses. So here 7,296. Go back there. 7,296. Uh, you can you can see total operating profit or loss. Total operating profit or loss. No, move up here. It is 9,712. So actually you missed something here. So
Do I need to
oh,
include
so
the?
for your case, they already report depreciation, amortization, and depletion.
Mm-hmm.
Okay. So can you no just stay in the income statement tab and go down. Go down. Yeah. So you actually collected all the depreciation, amortization, non-cash adjustment here. Okay. Can you move
Oh,
up?
I have the wrong one. I think that's what it is. I just have the depreciation and amortization. I need the one that includes the depletion.
Yeah,
I think
but
that's it.
still it should not make any difference because your total I mean your taxable return taxable income should be the same as reported by the Morningstar. So it is not a problem. Just move up. Okay. So now here, let me see. So let us now compare. So Euro one can be used as a test case for other students how to fix problem. So let us now check operating income. So first of all, before you move, so from here we can see the gross profit. Sorry, let us check the gross profit. So gross profit for this company for the year 2015 is 34,672. So now let us check your forecasted income statement. 34,006. So this one is correct. So actually you made some error in recording the operating expenses. Okay.
I think it's my depreciation expense.
can you show me the calculation for operating expenses? Operating expense. No, no, no. Operating expense, not operating income. Operating expense right under gross profit. Here you can see, here is the problem. So here you need to take the difference between the operating expense reported and depreciation expense. So here, just do what I am saying. So put positive sign plus right after B7. Yeah. Then go back to the income statement page. Yeah. Go scroll down, then select depreciation. Yes. And now put no, put these two cell in a bracket, in first bracket. Yeah. Put one bracket right after B47 and one right before, right after the equal sign. Yeah. Hit enter. Oh, yeah, okay. Hit enter. Okay. So now drag it all the way down to 2020. Okay. So now let us now match 9,712. So scroll up. So here you can see now it match. So you can later on change your depreciation number. So now it is not going to make any difference in your calculation. Now let us see what else you did here. So your taxable income is 8,801. So so go back to your income statement, and then taxable income 7,442. Okay. So now here let us figure out how many items do you have. So they report interest income, interest expense as always, then other income. So you can see here you have more items than I have in your non-operating income expense section. So you can see here, yeah, you have interest income and interest expense. Then right after other income, you have irregular income or expenses. See, again, if you use irregular income or expense, you cannot use impairment, because impairment is the sub item of the irregular income, right? So you
Mhm.
cannot use it. Yep. Then you have net investment income also. Here, right after impairment, you have net investment income. Yeah. So highlight this item.
All of it's blank though. It doesn't
Yeah,
have any.
but just to make sure, just highlight it and then put zero to the blank cells. Yeah. Okay, and do the same for other income and irregular income. For other income and irregular income, you also have some blank cells. Yeah. Oh, 0 0. Yeah. 0 0. Okay, so now for your other income, you need to add other income, expenses, irregular income, and net investment income in the same cell. So go back to your forecasted IS. Yeah. And then other income, go to the 2015 cell for other income. uh, here, yes. So now let us just add all of those three items together. This plus you know what, it is going to create problems. So don't use the sum formula, just do them individually. So go back, then select other income, then irregular income, then net investment income. Yeah. Then put all of these three items into the same bracket. Yep. Hit enter. So now you can see 7,742.
Thank you.
You're welcome. So From here, the great lesson we all learned is, other than interest income and interest expenses, you should put all other non-operating income and expenses under the other income and expenses line item. Okay. Okay. So now let us complete the balance sheet part. Oh, I need to share my screen now. Okay. So now here under current asset, you can see how many items are we reporting. We are reporting 1, 2, 3, 4. So we are reporting 4 items. So the trick here is we need to identify total cash and cash equivalent, inventories and receivables. Then all other items under current asset should be summed up for the other current assets. So all other items should be reported under other current assets. Okay, so let us now identify total cash and cash equivalent, inventories and receivables. Then uh, sum up all the remaining current asset items for the other current asset line item. Okay, so let us go back to the balance sheet tab. So here you can see, so this one is the, you can see this one is the total current asset section in the balance sheet. You can see here. Now we are going to actually calculate this total current asset, so we don't need to copy it. Then we should move to the next sub item under this total current asset. So now this one is the sub item, right? You can see right after total current asset, this cash and cash equivalent started with a space at the very beginning. So from this space, we can make sure that indeed this cash and cash equivalent is the sub item of the total current assets. So with the same space, let us identify how many items do we have. You can see with this same space we have cash, we have inventories, we have trade and other receivables, we have other current assets, we have deferred tax assets. Right after this one, the total non-current assets starts. So we know this is the last item under total current assets. Now, from the format, we know we are going to individually report cash and cash equivalent, inventories, and accounts receivable. Then, other than these 3 items, we have to sum up the remaining items into the single line items. So let us do it. So total cash and cash equivalent equal this divided by 1, 2, 3, 1, 2, 3. We are converting everything into USD million terms. Then other current assets. Now we are going to sum up the remaining items for this line item. So in my case, I have other current assets and deferred tax assets. Remember, in my case, okay, you all can mute your sound. Okay, so here divided by 1, 2, 3, 1, 2, 3. Oh, sorry, I selected the wrong line. So here, other current asset equal other current assets plus deferred tax assets divided by 1 million Then I'm dragging it all the way to the very last year. Now sum them up. For your information, please don't use the sum function here. It is going to create problem. So manually sum them up. So it is not only here. Everywhere here, don't use the sum function. SUM, the sum function to add them up. Don't do it. It is going to create problem later on. You are going to see. So add them up manually. So equal here, this, 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 and this. So I am adding up all the 4 line items to get the total current assets. Now let us compare. So my total current assets for the year 2015 is 89,378. Let us go back to the balance sheet. Here you can see total current asset is how much? 89,378. So my calculated item is the same as the amount reported here. So that means what? I actually included everyone properly in my income statement and balance sheet template. Now let us move to the non-current assets. So
I have a question.
yeah,
On mine, I don't have the other current assets and the deferred tax liability.
so what do you have?
You want me to share my screen?
Yeah, you can share it.
Okay.
So Mr. Trey, you can see like with the same space at the beginning, how many items do you have under total current assets? With the same space at the very beginning.
Well, you're talking about like all of these items?
I'm saying you can see the space at the beginning of the cash and cash equivalent, right?
Mm-hmm.
So with the same space, with the same equal amount of space, how many items do you have under total current assets? Can you show me?
I'm not sure I'm understanding what you're asking for.
So you can see the space right in front of cash and cash equivalent is the same as the inventories. Let me just uh, show you my one.
Okay.
Um, so then you will understand. Okay. So do you see the space in front of my cash and cash equivalent? The space.
Mm-hmm.
Can you see?
Yes.
Okay. So with the same space, how many items do I have under total current assets? You can see the space. Let us compare. Let me just give you another perspective. This is the space you have right in front of cash and cash equivalent. Then now if you compare space of this one with the space right in front, right before this item, you can see the space here is from here to here, right?
Mm-hmm.
And for this one the space is even longer, right? So
Mm-hmm.
that means they are not under that means this one, you can see this one is a subcategory of this. Now we want to identify the main items here, main items. So main items will have the same amount of space. So from here you can identify you have this amount of space right before the main line items, right? So let us identify other items with the equal amount of space. So you have here inventories, you can see the space in front of inventories is the same as the space in front of the cash and cash equivalent. That means what? They are the major line items. So if you select cash and cash equivalent, you must have to select inventories. Now let us find out the next major line item. So now you can see with the equal amount of space, you have trade and trade receivables. Does it make sense?
Yes.
Now just go drag your the mouse down. So you can see with the equal amount of space you now have here other current assets and deferred tax assets, right?
Mm-hmm.
Then you can see the total non current assets start. So that means this one is a very different uh, uh, different category, so you don't need to select those items yet. So your current assets actually stops here, your current assets stop here. So now from this part, you know, your total current assets have how many line items, major line items? One, two, three, four, five in my case. So I have to actually um, copy all of these 5 line items to my forecasted income statement and balance sheet. Now, can you share now your screen?
Yes.
Let me now show you. Now everything should make sense to you. Okay, so go back to the balance sheet tab.
So it would be these two items for mine.
Exactly. So basically, you should sum these two items for the other assets. Is it clear now?
Yes. And you said you add them together?
Yeah.
Okay.
Now compare your current assets. You calculate with the current assets reported. In your case, it is 60,239. So let us compare. You can see now you got the right total current asset amount, right?
Okay. Yes. Thank you.
You're welcome. So let us move to the next step. Now here, oh no, not this one. Let me just this one. Okay. Okay. So under non-current assets, you can see we need to collect gross property, plant and equipment, accumulated depreciation. So the difference between gross PPE and accumulated depreciation will give you net PPE. Then you need to collect total long-term investment, and then you need to collect other non-current assets. Then you need to also collect gross goodwill and then accumulated amortization and depreciation applicable to the gross goodwill. That is how we are going to calculate net uh, goodwill and other intangible assets. Now, for some cases, you may have items beside this gross goodwill and intangible assets, then other non-current assets, long-term investment, gross PP. You may have other items. So in that case, you can create another line item here if you have, and then put it as other non-current assets. Let me see. Do I have other non-current assets here? Oh, I have. Sorry, I already put it here, so you don't need to. So I put it as a precaution. If you have other items beside these main categories, you can sum them up here. Okay. So you don't need to make any extra line here. Whatever I have should be sufficient for your format. So now let us identify all of these items from the balance sheet. Now, if we scroll down, you can see from here, your total non-current assets started. So we don't need to actually copy this item because we are going to calculate it. So this is the item we are going to calculate. So we are going to start with net PPE. And you can see here, net PPE, as I discussed earlier, net PPE is the difference between your gross PPE and accumulated depreciation. So we are going to calculate net PPE. You don't need to collect it. So just leave it alone. Now, let's move to the next category. Gross PPE, you can see here. So you should copy gross PPE. So you can see the subcategories right under gross PPE. So the subcategories under gross PPE includes what? Properties, machineries. So you don't need to, since you are considering gross PPE, you don't need to consider these subcategories. Otherwise, you're gonna count the same items twice. So gross PPE I have calculated, I have collected. Then let us find out the accumulated depreciation. So here, so we are gonna consider this one. So if you consider this accumulated depreciation, you don't need to consider accumulated depreciation reported right under it, because this is the subcategory of the accumulated depreciation and impairment. Next, now by considering gross PPE and accumulated depreciation, you are actually considering what? Net PPE, because this is the part which is the difference between gross PPE and accumulated depreciation. So let us now find out the other line items like net PPE. So you can see the space here in front of net PPE, right? So with the same space, what items do you have? So let us go all the way down. So you can see with the same space, you have what? Total long-term investment. So you're gonna use this one. Then these items are the subcategories of total long-term investment. So you don't need to consider those. Then with the same space, you can see if you just go down, net PPE, total long-term investment, other non-current asset, then net intangible asset. Now, for net intangible asset, we are going to calculate it. So how we are going to calculate it? We are going to collect gross goodwill and other intangible asset. We are going to collect accumulated amortization and impairment applicable to this gross goodwill and other intangible assets. This is how we are going to calculate net intangible asset. So now you will already calculate net intangible asset. Then let us go down. Now if you see, we don't have any other items under non-current assets. So that means what? This is how we consider all items. So you can apply the same process and then find out items you should record under non-current assets. So let us now transfer all of these items to my forecasted income statement and balance sheet. So here gross PPE equal this divided by 1, 2, 3, 1 million, drag it all the way down to the most recent year, then accumulated depreciation and amortization. So here then net PPE is the difference between your gross PPE and accumulated depreciation and amortization. So let me just show you the proof. Here net PPE is how much? 22,471. So you see how much you see here, 22,471. So by considering gross PPE and accumulated depreciation and impairment, you are in effect considering the net PPE, right? Okay. Next, long-term investment. Next, other non-current assets. So I'm gonna leave it for the very last step, because whatever items will remain after I account all the major line items, I'm gonna include them under other non-current assets. So leave it alone right now. Move to the gross goodwill and other intangible assets. So here, gross goodwill and other intangible assets. Then accumulated depreciation. Okay, then let us calculate net goodwill and other intangible assets. Now, let us go back to the balance sheet. You can see I included all the major items I have under the non-current assets. In my case, uh, then I have just this item left. So you may have more than one item. In my case, I have just one item. So I'm going to include this item in the other non-current asset section. So other non-current assets equal this divided by 1 million. So drag it all the way down. Now we have all the information to calculate total non-current asset. So total non-current assets should be sum of net PPE plus your long-term investment plus other non-current assets plus your net goodwill and other intangible assets. Now drag all the way down. So then calculate total asset. Total assets is the sum of current assets and non-current assets. Now let us compare the number we calculate with the number reported. So here you can see total non-current asset for the year 2015 is 200,000. So here you can see total non-current asset is how much? 200,000 for the year 2015. Then let us now compare total assets calculated with the total assets reported. So here total asset at the very beginning, you can see for the year 2019 is 290,000, and here I calculate 290,000. So they are the same. So that means the way I actually incorporated all the reported items in my forecasted income statement and balance sheet template is correct. So you can also compare your ones with the amount reported and then let me know whether you got the right number or not. So have you got the right number?
For mine, I couldn't find a couple. Like I couldn't find the total long-term investments. The not.
Okay, if as I said, it is not necessary that you must have to have those items. If you don't have those items, then put 0 over there.
Okay.
So in financial statements are different from one company to another company. So it is not necessary that whatever items I reported here should be available in your financial statements, and therefore I put this flexibility by incorporating these other non-current assets. Say if you have more items than what I have here, you can actually sum them up here under other non-current assets. In the case of total current assets, if you have more items than what I have reported here, you can add them up under other current assets. But what you need to make sure is your total current asset number, total non-current asset number, total asset number are the same as reported here in the balance sheet. Okay, now let us move to the liabilities and owner's equity section. So in the liabilities and owner's equity section, you can see here, we are going to consider payable, then current debt, then other current liabilities. So here you need to first identify current debt, then you need to identify payables, and then you need to sum up all the remaining items under other current liabilities. Now, before we actually identify all the current liabilities items, I need to mention one important fact here. You can see here current portion of long-term debt. So for the valuation purpose, you should add the current portion of the long-term debt to the long-term debt reported under long-term liabilities. So you need to add up current portion of the long-term debt and the remaining portion of the long-term debt to get the total long-term debt. So we are not going to consider this current debt portion reported under your total current liabilities to calculate your total current liabilities. You are not going to consider this part. Okay, so now let me show you what accounts I am going to consider in my case. So you can see here my total current liabilities start here. So I'm going to consider all the sub items of the total current liabilities. So you can see right after total current liabilities, I have payables. So payables is the subcategories of the total current liabilities. Now let me identify all the items with the same space here, with the equal amount of space. So payable, then if you just go down, you have financial liabilities. Okay, so that means I need to consider this part. So just keep it in mind, I need to consider financial liabilities. Then I'm going to discuss this part in details later on, but for the time being, just remember I need to consider payables, then financial liabilities, then just go down, deferred liabilities, other current liabilities. Then the total non-current liabilities start, so that means I need to stop here. Oh, I also need to consider provision. You can see this one also has the same space. So you can see payables, then with the equal amount of space I have financial liabilities, then I have deferred liabilities, I have other current liabilities, I have provision current. Now I'm gonna break down this financial liabilities into current debt and long-term debt. So you can see this is the current debt you have. So let me just make sure. So I'm gonna break it down into current debt. Okay, so I'm gonna break it down into current debt and long-term portion of the current debt. So you can see here, I have here current debt, and then I have here long-term debt. So if I consider these two items, you can see if you sum up these two items, the total amount you are going to receive is total financial liabilities. So that means 10,999. So if you consider current debt and long-term debt, you actually in effect consider financial liabilities. So you don't need to separately consider it. But as I discussed earlier, I'm going to report this part, the total current debt, to the long-term debt section. So I'm not going to consider this part. I'm going to only consider current debt. So in this case, your total current liabilities you calculate should not be the same as the total current liabilities reported here. Okay, so let us now report one by one. Payables, convert it into USD million. Then current debt, next other current liabilities. So I'm gonna add the remaining items to get the other current liabilities. So let us add the remaining items. So you can see here I have this, I have this, and I have this one. In your case, you may have more than three, you may have two, or you have one. Okay. Then let us calculate total current liabilities. So total current liabilities is the sum of payables, current debt, and other current liabilities. Okay. Now let us calculate non-current liabilities. So for non-current liabilities, first we are gonna consider long-term debt and lease liabilities. Then we are gonna add the remaining items to get the other non-current liabilities. So let us go down. You can see from here total non-current liabilities start. Now here you want to consider financial liabilities non-current, because that's the item, sub items of the total current liabilities. So and then you see here long-term debt is the only sub item of the long-term financial liabilities. So even if, according to our discussion, even if you consider it, so you can see this one is the same as the long-term debt. So basically this item will be recorded under long-term debt. So let us find out other items with the equal space here. So with the equal space, you have payables and accrued expenses. So you are gonna consider this one. You have other non-current asset liabilities. With the equal space, you have tax liabilities. With the equal space, you have deferred liabilities. So to get other non-current liabilities, you need to add up these four items. And then to get total long-term debt, you need to consider this item, and also you need to add up the current portion of the long-term debt from the current liabilities section to this item. So let us now calculate. So your long-term debt is equal to this, then your long-term debt here plus your current portion of the long-term debt, this divided by 1 million, then your other non-current liabilities should be the sum of payables, then other non-current liabilities, tax liabilities, and deferred liabilities. And then convert it into USD million. Then your non-current liabilities is the sum of long-term debt and other non-current liabilities. Now you want to make sure that you actually put everything correctly in the other liabilities section. Just okay, um, let us not make it complex. Just for the time being, calculate the sum of total current liabilities and total non-current liabilities. For the time being, just calculate it. Then we are going to delete it. So you can see your total liabilities you calculate for the year 2015 is 170,000. So let us now compare total liabilities calculated with the total liabilities reported. So here your total liabilities, here you can see your total liabilities reported is how much? 170,000. And my calculated total liabilities is how much? 170,000. That means what? I put all the line items properly in my template. Now let us move to the shareholders equity. So in shareholders equity we have just two line items. One is retained earnings, the other one is common stock and others. So first we are gonna report retained earnings. Then we are gonna report all other remaining items under common stocks and others. So let us start from the retained earnings. So here, if you go down, you can see here retained earnings, right? Then convert it into USD million. Now let us see what other items we need to consider to get common stocks and others. So here you can see under total equity, they are reporting equity attributable to parent shareholders. So under these items, what you have? You have paid in capital, and then you have retained earnings here. Um, Here reserves, here retained earnings. So you already reported this one. So the other items you have alongside this retained earnings include paid in capital. You see the same space like retained earnings. You have what? Paid in capital, and you have reserves. So let us add them up. Paid up capital and reserves. Convert them into USD million. If you have equity attributable to minority shareholders, add them up with this one. In my case, I don't have any equity attributable to parent to minority shareholders. If you have any, add it up to these line to this line item. Then the sum of common stock and retained earnings should provide you total shareholders equity. Now let us calculate total liabilities and shareholders equity. So total liabilities and shareholders equity is the sum of total current liabilities, total non-current liabilities, total shareholders equity. Now, do you have you faced any problem up to this part? Okay. If not, then we can finish the rest of the work in just 10 minutes. because other things will be very easy. So now here you can see you need to calculate revenue growth. So let us calculate revenue growth. So the formula for revenue growth is what? Current items divided by the previous item minus 1. So this is how you get the revenue growth. Drag it all the way down to the very last year. Next, calculate cost of revenues as percentage of sales. So cost of revenues as percentage of what? Sales. So divide cost of revenue by the total revenues. Next, operating expense as percentage of sales. So operating expense divided by total sales. Next, interest expense as percentage of short and long-term debt. So your interest expense divided by your short-term debt. So you can see here, see your short-term debt is here, current debt plus your long-term debt. So the sum of your short-term debt and long-term debt should provide you your total debt. Then whenever you divide your interest expense by your total debt, you get the average interest expense, average interest rate. So this is the interest rate. Now interest income. So you generate interest income on your cash and cash equivalent. So let us calculate your interest income rate. So interest income divided by your cash and cash equivalent. Next, other income as percentage of sales. Next, your effective tax rate. So your tax expenses divided by your taxable income should provide you the effective tax rate. So now you have completed everything here. Now let us calculate the other items here. So here, total cash and cash equivalent will be your plugin item. Remember we discussed the plugin item in chapter number 11. So if you check the video posted for module number 11, you should find the concept for the plugin item. Now let us calculate here expected total cash and cash equivalent, which is total cash divided by your total sales revenue. Next, inventories as percentage of sales. So inventories divided by total sales. Remember here, whatever calculation I am doing here is using the concept we discussed in module number 11. So remember, to forecast pro forma financial statement, we need to convert most of the items in the financial statements as percentage of total sales. For some items, we need to calculate some other ratios depending on the concept. If you recall from module number 11, for interest expense here, we need to calculate interest expense rate. For interest income, we need to calculate interest income rate. So here we cannot actually calculate interest income as percentage of total sales. Rather, we need to calculate interest income rate by dividing interest income by total cash. So we discussed all of these concepts in module number 11. But still, if you have any confusion, please see me during the office hour. I'm going to discuss them in details. Then let us convert receivables as percentage of total sales. Now, next one is growth in total long-term investment. So once again, the current item divided by the previous item minus 1. Next, payables as percentage of total sales. Payables divided by total sales. Then growth in current debt. So current item divided by the previous item minus 1. Next, growth in long-term debt. Current item divided by previous item minus 1. Okay, actually we need to make this calculation here. So actual total cash divided by total sales. So this is how you get your forecasted financial statement. Um, we are running out of time, but we discussed all the concepts in your class. Let me just give you some preview. But in your at your home, I recommend you to go over the template and then find how I calculated all of these items. But once again, we already discussed all of these concepts in module number 11. So here, to get revenues in the forecasted years, we need to calculate revenue growth rate. And how do we calculate that? We take the average from the previous years. However, you can change all of these assumptions based on your own intuition. If you think, okay, Apple may not continue its historical growth rate, you can reduce it based on your own perception. Say you think the Apple sales growth rate will be 1% less than its historical average growth rate, then reduce it by 1%. If you think it will be 2% more than the historical average rate, increase it by 2%. So you can always use your own perception to get all of these forecasted numbers. Next, here we need to calculate cost of revenues as percentage of sales for the historical years, and then to get the cost of revenues we need to multiply the ratio with the forecasted revenues, as you can see here. So check all of these one by one at your home. Even if you don't check but you properly include all the items here in this section, the forecasted financial statement should automatically be calculated for you. So it is not going to take any time for you to calculate your forecasted financial statement. So you should have sufficient information or sufficient tables to prepare your term paper. But I recommend all of you to check the template and make the necessary adjustment. Remember, here we are learning all of these to do well in your job market, right? So to do well in your job market or to work well for your employer, you need to know how I calculated all of these items. So check it at home. Then before you leave, let me just tell you some items. So here you need to collect, here you need to actually collect some items here, and then the remaining items will automatically be calculated for you. And we are gonna discuss the concept for dividend discount model, free cash flow model, multiples model in our next classes. But for the term paper, you don't need to wait for the other classes. You will get the numbers automatically. So don't worry about this part. So here you can see here, you need to calculate beta. You need to find beta, and you can get beta from Yahoo Finance. I already showed you how to actually get your Yahoo Finance page for your own company. So collect beta from there. Then you already know how to calculate average market return. Then risk-free rate should remain the same for all of you, but you can still find the rate in this particular web link. But 1.36% should be the risk-free rate for all of you. Then here I'm applying CAPM model to calculate cost of equity. Then cost of debt should be automatically calculated. Then get market capitalization from Yahoo Finance, from Nasdaq. You can get it from so many other sources. The number of share outstanding can be found in Yahoo Finance. So always convert your number of shares into million. Remember, all of these should be in million. So make sure, sometimes you may find your number of shares in billion, in million. So always convert it in million. You know, but you also can find it from here, from the balance sheet. You can see here. Um, you can see here common shares outstanding. So here they already provide the number, and you can convert it into million. Okay. Then total debt will automatically be calculated. Tax rate will automatically be calculated for you. All of these will automatically be calculated. So now from here, you know, you need to collect this, this, and then this. So collect these three items from the sources I provided here. And you know, for common stock, number of common stocks, you can use this balance sheet data. Here it is provided already. And then for these valuation multiples, here you need to know some valuation multiples, the benchmark. Sorry, here is the benchmark. For benchmark, use Morningstar. So let me just show you. Here you can see the Morningstar, Apple page in Morningstar. Go to the valuation page. And then use this 5-year average numbers as your benchmark. Say for example, here the average price earnings ratio over the last 5 years for this company is how much? 18.09. So this should be the benchmark for your price earnings ratio. So here you should put here 18.09. And then for price book ratio, your benchmark is how much? 9.08. So you put here 9.08. So you can you should adjust these numbers. Then this table should automatically be calculated for you. And for your information, if you have any negative price calculated, don't consider it to get your number, because price cannot be negative. So this is how you will get your price number. And then um, you know, compare the price you calculate here with the current market price, and then make your decision. And for your information, in most of the case, you will find your price, your calculated price, significantly lower than the current market price. And the reason is this: right now, uh, the stock market uh, actually increased significantly from the previous downturn. Therefore, some say stock market is overvalued. Once again, these are for academic purpose, not for your investment purpose. So in most of the cases, you'll see the current market price is far greater than the price you calculate. Next, here, whenever you calculate this pro forma financial statement, you are not actually using the analyst report, I mean the analyst call information or management discussion and analysis information to get your assumption number. So it is most likely that the number you forecast here do not match the actual number of this company. So therefore, in most of the cases, the price number you get here may be significantly less than the current market price. However, here the main purpose is not for you to calculate the correct price. Here, the main purpose is to make yourself familiar to the equity note format and the pro forma financial statement and valuation format. So as long as you understand the format and put together a nice equity report, you actually serve the purpose. So please use your time and then complete your term paper. Thank you. That's all for this class.